So just remember, as a nation, we are broke. Okay. I don't I love seeing people try and dispute that, but we're broke. We spend more than we take in. Um, if you've ever said, which you have, and we all have, that we are on an unsustainable fiscal path.
Expanding our money supply because the Fed has been restrictive. I'm going to explain that.
Credit card loans, car loans, those are short-term borrowing rates, and they are low right now.
Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending. Existing home sales, 4 million home sales annual rate. That's with a little drop.
Hey, it's KP coming to you live from Carlsbad, California. We're at the Core Connect. It's now Cotality Connect, no longer known as CoreLogic. It is Cotality, and this is their Connect 25. And the rebrand is going well. Incredible speakers, learned a lot about AI and a lot of stuff that Google's working on and Cotality's working on. Great executive roundtable yesterday. Getting to just talk amongst some, really experienced operators, and this industry is moving fast. There's a lot going on. I mean, we could talk about AI to death, and we did, and we will, and we'll never stop because it's coming like a freight train. But let's get into some of the macro and some of the stuff going on. This is probably the busiest week we've had in at least a quarter since the kerfuffle in April. So it is a huge week. Obviously, we have Q2 GDP report. We've got Treasury quarterly refunding announcement. We have a Fed meeting that starts tomorrow with a Q&A session on Wednesday, which is huge. 4 of the Magnificent 7 report earnings. Meta, Amazon, Microsoft, and Tesla and Google already went, and NVIDIA is at the end of the month. Apple is the other one. So huge earnings week, the biggest week of earnings week. Most companies report this week, and they've been beating. I mean, a lot of people have been beating. Stock market's a little overbought and exhausted. I am not a financial advisor. I'm not responsible for your losses, only your profits. But I will say the stock market is, it's kind of toppy. It's kind of frothy. I can't call a top. Can't do that to you. But man, these companies are winning on earnings. But when markets get kind of toppy, it becomes like a buying the rumor, selling the news, or selling the fact. Here with my reverse camera, you can see Cotality's good marketing. They've got the stickers on the floor, and just a fantastic event. We're going to walk down this hallway. So then it's jobs week. So we have the job opening labor turnover report tomorrow. And then Friday, we cap off the week with the jobs report. So that is the Bureau of Labor Statistics jobs report for the month of July. So we're already August 1st on Friday. It is literally a market-moving, potentially highly volatile week. Having said that, 10-year Treasury is like 440, 441, 440-ish, right in the middle of 5 and 4%. We've been just kind of hanging around this 450 cap that we've had on there. By the way, here's where the lab was, where all these demos were being done. This board is unbelievable. They show all this housing data. It shows, like the fires in the Palisades and flood risk for, properties in Miami. And the content is incredible here. I mean, the speakers are unbelievable. Anyway, it's a huge news week. And then, of course, we get personal consumption expenditure, which is supposed to go up a little bit. All right. So like to 2.5 up from 2.4. And then I believe the core number is anticipated to go up to 2.7. So trade deals announced. The trade deal with the European Union, like the biggest deal ever made. It's unbelievable. Like I can't even. Let me before we get into that, because people get a little triggered when you talk about anything that's going on in politics right now, which it's definitely political. So I have to reset my brain to think mathematically, use science, math, data, and facts to help me kind of guide where I'm going through. And I know a lot of us have these feelings. So just remember, as a nation, we are broke. Okay. I love seeing people try and dispute that, but we're broke. We spend more than we take in. If you've ever said, which you have, and we all have, that we are on an unsustainable fiscal path, and our grandchildren will be saddled with debt. We just saw the one big beautiful bill raise the debt ceiling to 5 trillion. So we're going to have, we're 39 trillion and counting. I mean, we know that we're broke. Now, consumers aren't broke, not all of them. Most of the consumers are not broke, and they're resilient, and the economy is resilient, and the GDP should show that. I think it's like a 3.5% estimate, is what I read from Mizuho and some other places. And that's to offset the first quarter that was like negative. So, um, if we have 1.5% yearly GDP by the end of this year, that's below 2%. So, considering all the tariff talk, the economy remains resilient. The jobs market is soft with continuing claims being at 1.9 million, but those claims came down. Stocks are being rewarded for firing people. So you look at Microsoft in the headlines, you can look it up. You can see they fire like 15,000 employees, and their salaries are, average 150K. So that money that they saved boosted the stock. It's harder to find a job. It's just as hard to be a college graduate to find a job as it is with someone who's been in the workforce with a college degree currently. So it's a soft labor market if you're unemployed. Hiring is not, kicking off, and that's a problem. And so, when you look at, okay, if we're broke as a nation, okay, as in we are on an unsustainable fiscal path, and the quarterly Treasury Department refunding announcement basically said we need to sell more treasuries. Shocker. So now we have to, kind of front load something like $1.2 trillion in the next quarter to sell. How much of a surplus do we have? We are taking in money, tens of billions a month from tariff revenue. So it is a tax. It's a tax currently on importers. So importers are paying that tax. Consumers are strapped. Their credit card debts are high. Student loans are high. Medical bills are high. They now count against your credit report, and if you're a homeowner, you're in a good spot. You've got nested equity. You feel like you've got some wealth that's building over the last 5 years. And if you're not a homeowner, it's a little tougher to look at your balance sheet because you don't have that wealth that's building there. If you're invested in a 401k or the stock market, you're seeing wealth build there with stock markets at all-time highs, but it doesn't go on forever. That number does not go on forever. So, who's paying for the tariffs? It's mostly the importers. Now, the CPI report did show like home furnishings ticked up and appliances ticked up. If you're broke as a consumer, you're not paying for that stuff. I mean, you're just trying to get by. And so it is definitely a K-shaped economy, which we've talked about. And so when I say we're broke, it helps me square the fact that these trade deals that are being landed are a good thing. So $750 billion of goods, mostly energy, that the European Union has pledged to buy for the United States, and then something like $600 billion in stuff we're supposed to buy from them with a 15% tariff rate. I mean, that's down from where we thought we were going to be, at 35%. So a lot of, European automakers were roaring, and now some of our autos are going to be sold over there. I don't know, it could take some time to do all that. But the bottom line is you had a deal with the UK announced a while back. This administration is on their third meeting currently in Europe, Switzerland and Sweden, trying to work out a deal with China. August 1st is the trade deadline, which could get pushed back for some other countries. And some of the countries that didn't come to the table, the administration would just say, okay, you know what, you guys are at a 20% tariff rate. Boom, done. Right? It's like 17% of goods that we consume are imported. So it's not even all the goods, we take in and consume. And so, again, like I always say, like gun to your head, consumers aren't going to pay higher prices if they can't. And us as a nation, because we're broke, we can't keep moving forward with, trade imbalance. For 70 years, we've had trade imbalance with nations, taking our money and taking advantage of our consumer, and then taking our manufacturing jobs. So it's progress. I mean, it may not be what everyone wants, but the markets don't seem to be as unsettled as they were with the way it was rolled out on Liberation Day in April. So I'll take that as a win. This week obviously has tremendous news. I'll be back out with Thursday with a bunch of stuff. But let me just say something I heard really, really cool. Derek Thompson was a speaker here today. Whole abundance mindset, but it was interesting hearing him talk about housing, and he described, this is like the last little nugget. This is actually pretty cool. So he described housing as one of those Russian dolls where you have like a doll within a doll within a doll. And he's like, this is like a mad doll. Like the big doll is a 50-year doll. The second doll is a 20-year doll. And the third doll is a 5-year doll. And this is very succinctly explained. And it's something that can help us kind of square what's going on in housing. For 50 years, we've had wonky policies. Zoning has made it hard to build on smaller lots, for example, and build more houses. Everyone wants bigger houses, and it's harder, to deal with all the, kind of permitting and all the processes that are involved at the local level. I think the average cost I've heard is like $100,000 a house just to open the door. That's a 50-year large Russian doll. The 20-year Russian doll has been, from, the year 2000. Hey there, good job on the panel today.
Thank you.
From 2000 to, let's call it 2020, home prices appreciated 40%. And after the Great Recession, we lost, let's say since 2008, let's call it, that middle 20-year window, we lost a lot of construction jobs. And so it's harder for housing to be built in mass. And that is a lingering problem. It's still, we're woefully 4 million units short in housing. And in the last 5 years, if you go from 2020 to 2022, you saw 40% home price appreciation in 2 years versus the 20 years prior. And, since 2020, in the last 5 years, we've seen home prices go up. We've seen insurance go up, taxes go up, interest rates double. And so it's just kind of a little bit of a mess. Having said that, I read some data about HELOC. Business is up big time. Equity business is up. Loan amounts are up. So we're all grinding through the second half of the year. Hopefully, I'm advocating for a 25 basis point cut in September. I think it'll help, especially at the jumbo and non-QM level. Car loans, consumer loans, credit cards, it's a big deal. I'm not advocating for 100 basis points. Let's do 25 and let's see where the market shakes out. We got to get lower interest rates. All right, here's the DJ. Here's your last look. It's dinner time. I'm starving. It's not bad. I don't know if anybody's enjoying a cocktail or whatever they're doing down here, but I'm about to join them. It's only 8 o'clock here in beautiful Carlsbad. That is the ocean in the background. You can absolutely see it back there. Thanks again to Cotality for an incredible event. Y'all be doing. See you Thursday. Cheers. Hey, it's KP coming to you live from Balboa Pier on Newport Beach. Back there was filled with like over 1,000 people for junior lifeguard training, which is kind of a rite of passage out here. Our kids, our 10 and 12-year-old girls, they just completed their 7-week thing. They actually jumped off this pier at one point. They had a race that started under the pier, ran a mile down the beach, and then swam a mile back to right here to the A lifeguard stand. And there's the famous wedge over there. So life's good. And even ran into Peter Danahay from DocuTech. He's got his 4 kids out here too. Poor soul with 4 kids. Of course, that's our family out there, the last family. So we'll be here for a little bit. All right. So this is what a soft landing looks like. And the BRICS nation have been really quiet. So I'll talk about that. It's a massive news week. I could talk so fast here and get a lot out. And I'm going to try and keep this thing under 10 minutes. Famous last words. Okay. So the Fed hath spoken. So Chair Powell had his Q&A session yesterday. I got a chance to listen to it while driving from one appointment to another. And what's interesting is, he's not budging on tariffs. He really wants to see what it's going to cost. So it is what it is. I thought it was interesting that he said that, the reason we're not going down to 2% is because of the tariffs, but how high will we go? And there has been some inflation due to tariffs. And so consumer confidence is up. The GDP read for Q2, the advanced reading came out yesterday, I believe, and it said, could be this morning. God, this whole week's just running together. But spending has actually been down by consumers. It came out at 3%. So we'll get the final read and see what the average smoothed out Q1 versus Q2 number will be. It might end up being just 1.5%. So under 2%, not recessionary. So not yet. But most people are projecting for higher than 2% growth in the next couple quarters. But who knows if the consumer slows down. Now, remember, a recession is usually triggered by labor. And he had some very interesting things to say about labor as well. He said, it's harder to find a job. There's less jobs out there. The jobs opening report came out this week, 7.4 million jobs available, down from the month prior at 7.5. Cuts were up. Quit ratio is about 1.1%. But as the amount of job openings come down, the amount of supply of labor has come down, as he pointed out, due to immigration and immigration enforcement and less people coming in. I mean, the borders have been essentially closed up. So it's not that we're kicking so many people out to wreck labor. It's that we're not letting anyone new in this year. And so that has created a balance in labor, which, we'll find out tomorrow morning. Big jobs report, the July Bureau of Labor Statistics jobs report. Wage inflation and worker productivity are probably the most important things to look for in that report, not just the unemployment rate. They think labor is pretty steady. So, I thought it was kind of a punt into September. Well, there'll be a lot more data points coming out between now and the next meeting. So the market has a Fed Watch tool at the CME where it's kind of like a betting on whether rates will be cut or not at the next meeting. And there's like a 38.5% chance now, down from 75% chance from just a month ago of a 25 basis point rate cut. So the odds have gone down because the Fed is worried about potential inflation. So if you dig under the hood of the PCE, their preferred measure of inflation, the personal consumption expenditure, goods kind of went up a little bit, but it's still the same three major things. It's shelter, financial services, and insurance. There's a couple other things that are in there as well, but not a huge bump. Remember, the comp, every index is 12 months of readings. The comp from a year ago was flat. So we went up 0.256, not 0.3, but then, there's also some upward revisions of the prior month's readings. So we're at a 2.8% inflation rate according to the PCE, and I believe the core was a little higher. I think it's 2.4 and 2.8. So anyway, not down to 2%, slightly trending up. So where are we at with inflation? Companies like Meta, Facebook, and also Microsoft, they're not really impacted by inflation, and they crushed their earnings report. So lots of earnings reports are coming out. Now, a good read on the consumer, Procter & Gamble out of Cincinnati, very storied long-term company. They make like Tide and Crest and all kinds of stuff. They said that they project, by the way, they made $3 billion in Q2. So then they said they're going to lose $1 billion over all of 2026 due to inflation, tariff pressure. So they said they're going to announce on like 25% of their goods that they sell some price increases, which means it will flow through to the consumer. And those price increases are in single digits. So no more than 9%, maybe it could be 3%, and only on 25% of their goods, which tells me, it's not that bad. I mean, they made $3 billion in 3 months, right? So that's a $12 billion run rate. They're going to lose $1 billion next year, and they're going to increase prices on just 25% of their goods by single digits. So, the old meme that shows like, when you first get a tube of toothpaste, you squeeze it out, fill out your whole toothbrush. And then as you get towards the end, it's like a little bit less and less. Maybe people just start doing the less and less as soon as they buy the toothpaste. They have noticed some people trading down to kind of lesser brands. And so there's a little bit of trade down going on. But generally, consumer strong. Again, we'll get some information out in the morning. Consumer confidence is high. Job market's in balance. So far, tariff deals have been, the tariff inflation has been modest, but it's still uncertain. And so they want more certainty. So we're waiting until the next meeting. Another 6 weeks. Here we go. Who knows? In the meantime, rates have been in kind of a range, or kind of in the lower end of the range that they've been in lately. Haven't really gone above 4.54 and not really below 4.3 in a while. And I think we're at 4.37 right now. So it's a low end of the range. So steady as she goes. Now, tariff deals are getting done. Okay. Remember the BRICS nation, Brazil, Russia, India, China, you know, uh, Saudi Arabia, there's a whole bunch, BRICS Plus, and they got a whole bunch of them. Anyway, by the way, we're at Ruby's Diner. There's a diner right here on the end of the pier. It's pretty cool. It smells so good. I'm so hungry. So, you know, we always, there's this alliance being formed against us by these BRICS nations for the last couple, I don't know, it's called 2 decades. And fighting back. We're setting up massive global trade deals that are trying to bring trade balance back into the United States. And so South Korea was announced yesterday, which is huge. They've got Samsung over there. They make cars. Massive deal, like $350 billion deal with a 15% tariff. I think Mexico just got punted for 90 more days. So August 1st, the deadline tomorrow, they got punted 90 days. So that gets pushed back. China deal still being worked out. No, they have an August 14th date, I believe. So there was a third meeting here this week. I believe it was in Sweden or Switzerland. I always get the two confused. And so that deal's being worked on. Obviously, the biggest economy in the world besides us. But the European Union deal is a really, really big deal. Combined all together, $20 trillion economy amongst all the European Union nations. So that's a massive deal, like $750 billion plus another $600 billion in financing and investments in our country, kind of similar to how Japan had $600 billion investment announced with the 10%, I guess, take back on that financing they offer, and we get 90% of the profits. These are big, massive deals. And so we are fighting back against the BRICS. We're fighting back against trade imbalance. We're fighting back against, the entire world has been fleecing us for 70 years. Will it work? I don't know. Only 15.59% of all of our goods that come in here are imported. So I'm not even talking about the majority of what we buy. Now, material costs, you take someone like Ford, who tries to manufacture almost everything here in the United States, and now they got to pay higher for aluminum. And so will there be carve-outs for companies like that who are manufacturing here but are still being hurt by the tariffs? These are all things that take time to work out. And so, we'll see. And we'll just keep reporting back to y'all. Other earnings news, Fannie Mae, $3.3 billion made in 3 months. Good for them. Great group over there. Awesome leadership team. They are over the $100 billion net worth mark. And so remember, they're trying to get recapitalized so they can get eventually taken out of conservatorship, possibly. I think they're doing just fine. So that's all good news. Trigger lead legislation update. My friend Brendan McKay over at Broker Action Coalition just let me know that it's going back to the Hill next week. And it's kind of like repassed again in the Senate, I guess is the way it's explained. So could be some good news or better borrower experience, not having 100 phone calls as soon as they get their credit pulled. So there's a lot going on right now. There's still some more earnings reports. It kind of gets slow on the stock market. I'm not a financial advisor. I'm not responsible for your losses, only your profits. But it does get kind of slow in August. It's kind of a choppy, time. You hear that sell in May and go away. Well, because of the April kerfuffle for Liberation Day, those guys couldn't go away, those institutional traders. They couldn't go away in May. I had to work their ass off buying the dip. So they may double down, like I said in my prior video, and mail it in for the month of August. But the end of August caps earnings seasons with NVIDIA, which has $4 million in revenue per employee. My Alphabet is $2 million in revenue per employee. It's a good metric for us to look at in our offices. We had this discussion today going over our financial review at PRMG, talking about revenue per employee, revenue in the non-QM space, things like that to help you plan for the future. There's a lot of planning going on as we enter the slower time of the year, although locks were up slightly in July over June, which is a good sign. So anyway, there'll be tons of news, lots more stuff coming out for me. All the Fed speakers start speaking next week, and I'll get back to you. I'm right at 12 minutes. Have a wonderful, wonderful weekend. Cheers. Hey, it's KP coming to you live from Disneyland. Hey, it's Serafina had a daddy-daughter day.
And Daddy, when the first thing is out of school and we'll go to another store, then we're going to see even more sooner. See, everything that's planned here.
Yeah. All right. Hey, trigger legislation just passed. Just got the breaking news going to the president's desk. Many people didn't think it would happen, and it did. Thank you to all the efforts, all the great organizations, Mortgage Banker Association, Broker Action Coalition, NAM. There's a lot of, they say a bill that passes has many fathers, and a bill that doesn't is an orphan. And I want to thank Bill Kilmer for that quote, or Pete Mills. Here we go. Watch this. Whoa, are you driving or what? Who's driving this bus? Job support came out, absolute nightmare. But it kind of confirmed what we thought all along, is that labor is soft. It's not broken. It's weakening. Hang on, baby. And the revisions of 253 to 258,000 jobs before 2 months. It's just funny to watch the odds of a September 25 basis point rate cut go up like lightning fast. A month ago, it was 35%. After the Fed spoke, it was under 20, and now it's back up over 80. Anyway, lock and load, rates are at a 4-month low, We talk about these small little windows where rates, may only present themselves for a day or two or a week. I don't know if sustained labor weakness feels like it is, but if it is, we'll have sustained lower rates. So we will watch for all the Fed speak next week, and we will watch the Disney fireworks show here in about 20 minutes. I'm driving a car. And she's driving a car, and she had pizza for dinner.
Gummies.
Y'all have a good one. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.